All right. Today is June 12th, 2024, and I'm going to be doing a market analysis as well as a trade concept overview, a little breakdown of what PO3 is. So first, I'm going to start off with today's trades. Today was actually CPI and FOMC. Let's just mark that out. Okay. So Wednesday market analysis, New York PM session, CPI and FOMC. So, all right. So first thing in the morning, I'll go over the trades that I did end up taking. So I did end up taking this trade right here. This one was a losing trade that I believe I was targeting 15-minute lows. I was targeting this low right here. I was targeting this low, and I went onto the lower time frames, targeting this low, 15-minute low, and I went onto the lower time frames. I believe it was the 2-minute. Yeah, the 2-minute to get that low, and it didn't give it to me. So that was one first losing trade. And the other ones I did call out, it just didn't allow for it. So the first one was at 9:36, and that one ended up playing out kind of beautifully actually, because we had SMTs here. We had actually, I remember we had SMTs here with ES, I believe. Let me just check. Yeah, we had SMTs here. Yeah, we did have SMTs, so we did have SMTs with ES. Kind of turtle soup entry, displacement higher, tap back into 1 minute fair value gap. Maybe it was 2 as well. Yeah, 2-minute fair value gap, possibly 3. Yeah, 3-minute fair value gap as well. So we did retrace back into fair value gap. Basically, that's exactly what I would have wanted for in the trade, to be honest, but it didn't allow me to. And let's see what the 5-minute candle look like. So yeah, this actually would have been a pretty good decent trade here, because we're targeting this 5-minute high. Look, notice I'm also going to the lower time frames. We'll see here that we didn't actually take out the high. See, so create the high, retrace back down to fair value gap, and we actually closed here, closed up here, opened up with enough new 5-minute candle, and we didn't take it out yet. Retrace back in. The only problem with this trade was that I didn't follow my plan. And part of my plan is that I don't trade the last 30 minutes of a 4-hour candle. So this was actually the last 30 minutes, 9:30 to 10. That's the last 30 minutes, and it's also the first 30 minutes of the opening bell. So I'm not supposed. That's part of my rule. So didn't take that trade, but I did note that though. And the second trade that I was hoping to take was this trade right here, and we actually missed the trade by 75 points. 75 points, and my entry was actually at a 5-minute fair value gap right here, I believe. 5-minute fair value gap right here. I believe we did retrace back into this. I wanted this fair value gap. It was also plus a 15-minute fair value gap as well. Yeah, it was also a 15-minute fair value gap, but we didn't get it, so I didn't take the trade. That was my trade entry should have been is at the 5-minute fair value gap. Didn't allow for it, and it just took out this previous hourly high. And I'm not really upset with that. I mean, prices run will run without you all the time. It just depends on how you react to it and manage it, manage your emotions. So after that, I really was basically done with the New York PM or New York AM session after we ran out this 4-hour high right here, 4-hour high here, and I was just waiting for the 2 p.m. FOMC statement release. So FOMC releases at 2, and this is what happened. So we dipped lower into a 4-hour fair value gap with FOMC. We dipped this wick right here. That's formed right here is actually the FOMC statement. So FOMC's open, wick down. We create a pretty big wick here, and this is actually where my entry was. So after we wick down into the 4-hour fair value gap right here, tap into the 1 hour as well, we create this SMT and this candle right here. And so this is when I went onto the lower time frames to find any displacement to where I could find a trade. So my first trade actually was here. So after right here, so after we close above this SIBI, after we tapped into the 4-hour fair value gap, had SMT, we closed above a 5-minute SIBI. This to me is bullish price action. So after we closed above this SIBI turning into inversion, I wanted to go into the even lower time frames, 4, 3, 2, 1, to find any displacement FEGs to take an entry off of. And so we had FEG at 4 minute and 3 minute as well. And I believe my entry was at 3 minute. Stops at this. And I'm simply just targeting this 5-minute high and these highs right here. So I believe I did take partials. So alright, just making sure everything's working. I'm showing my screen. Okay, so I take my trade at the 3-minute fair value gap. Notice that right here stops is right below the 3-minute fair value gap, and I'm targeting this 5-minute high. So let me just mark that out. Work that out too. So this would have been a 1-on-1, and keep in mind that I had TPs taken out right here. So TPs here, here, and my N1 is right here. So after we take up this 5-minute high, I move my stops to break even. So basically I just moved it to break even after taking out this high, this high, this high, and overall trading up to this high. I wanted to get up to here with prices, but nope. After we take out this high, I am stopped at break even. So then I reset my. I let prices do its thing and see what we do from there. So after all of that, we kind of consolidate a little bit. We tap back into the 4-hour again here, and I want to see if we had SMTs. I didn't check if we had SMTs or not, but let me just check. No SMTs with ES. What do we have? No SMTs actually. So there's no SMT here, but the key reason why I took this trade was because there's displacement away again, but there's actually displacement on the 5-minute this time, away from the 4-hour fair value gap. And notice how this hourly close right here, this hourly candle right here closed quite bullishly. So in my head, what's going on in my head right now is that is prices most likely gonna take this high here, make this bold, see this high or this low? Think in your head right now. if, with context, keep in mind this candle over here. We formed this candle after tapping to a 4-hour fair value gap. So we wicked into the 4-hour fair value gap. And then we create this massive wick. Or are we going to take out this low or this high? This high, obviously. We're going to take out this hourly high. So I'll mark that with a green. So with that in mind, I am bullish. Just for with that objective in mind, that's all that's going through my head right now. We tapped into a 4-hour fair value gap. We create this really bullish 1-hour candle. So I'm anticipating the next hourly candle to be a open low. So open, low, high, and then close. That's basically what I'm anticipating for the next candle to be like. What? Okay, so in that hourly wick, in this wick right here, I'm looking to see if there's any PD arrays that support the idea of us attacking this high. Sorry. I'm looking for any ideas that will support for prices to tap into the PD array, whatever PD array it is in that wick, to help us take out this high with the next candle. So that brings me back to the 5-minute time frame. We have a 5-minute fair value gap actually, and notice, look, it is within this 1-hour candle. 1-hour candle's wick. It's supporting the idea of us taking out this high. So with that in mind, that's my trade criteria. And we closed above this SIBI right here. This 5-minute SIBI. I'm highlighting that's orange. We closed above that SIBI with displacement. Displacement being fair value gaps. Strength. Fair value gaps equals strength. So I go on to the lower time frames for an entry. So after the 5-minute time frame, I go on to the 4, 3, 2, and 1. So I go into the 1. I'm at the 1 now. And just compare this move to the rest of these moves here. Much stronger. And even on the 5-minute time frame, we don't even have any fair value gaps onto this side. But now we've created a 5-minute fair value gap on the 1 minute now. Alright, so like I said, I'm anticipating this candle right here. Before this candle was even created, I'm anticipating this candle to be a open, low, high, close. Power of 3. I'll be right back. I'm gonna get some water. So let's go back to what I was saying. Like I said, I'm expecting this candle to be an open, low, high, close. Notice I noted out this 3 p.m. power of 3. I just noted 3 p.m. We open. So usually it's 60-minute time intervals, right? So we open, we created a high, and then we went back below. Keep in mind, we went back below the 3 p.m. open. This is the open. We're here right now. Look to your right. Look at my cursor. We're here right now. We wicked low. We wicked into a 5-minute fair value gap. That's going to support prices of taking out this high. And 4-hour highs as well. So that was basically my trade. I'm trading power of 3. one of the rules I have set for myself is I wait for a candle closes. So I waited for this candle to close, this 1 hour candle right here. I'm gonna point it out again in black, waiting for that candle to close, and just looking at how it's closed, I'm anticipating this high to get ran with supporting ideas on the lower time frames. So here is the 5-minute FEG. Change up the border. So I have my stop, or my entry actually, right at the 5-minute fair value gap. And then I have it targets at New York AM session highs, 4-hour highs. And this is, keep in mind, this is also all-time highs as well. And I had stops, I believe, right here. So 1.4 risk to reward. 1.4 to 1 risk to reward ratio. Another thing that I would want to point out is that 2 p.m. 2 p.m. is 10 p.m. or sorry, 10 a.m. and 2 p.m. are the two opens in the New York sessions that you should keep in mind, that you should have throughout the whole day. 10 and 2 are basically the opens of the new 4-hour candle. So here, like I said, like a note. 2 p.m. 4-hour open. If you're a buyer, like ICT says, you want to be buyer below the midnight open, right? Apply that to 4-hour candles as well. So we open at 2 p.m. We dip lower from FOMC, right? Kind of chopped a lot here. This whole thing right here is chopped until we see this move. That move right there with displacement on the 5-minute time frame kind of tells us, hey, we're probably going to run out this session highs now. With SMT, we didn't even take out that SMT low right here. 5-minute fair value gap. Super bullish structure on the 1 hour. And we're buying below the 3 p.m. open and the 2 p.m. open. We bought below it. Buying the wicks. And that was my trade for that, for today's. Overall, today was a pretty... it was quick and sloppy. We had no SMTs at the Asia and London's. Oh, actually, we had SMTs, I believe, here and here, but I don't think any of the indices... I think all indices left Asia's as... Asia lows as the low of the day. Let me just check. Alright, so yeah, we had Asia's low of the day at the moment. Yes, also has Asia lows as low of the day. Yeah, so we had no SMT there, but we did actually have SMT at the London and New York open. But as for your own studies. Yeah, that's my trade breakdown. I can actually go over it again. Have it in text this time for myself. So, actually, I'll do that. Alright, the video is already 18 minutes long. Okay. The next thing I do want to talk about is a concept called Power of 3. So I did already briefly speak about that in the trade execution breakdown. But for a deeper dive into it, or more of a little touch up, I will created some slides to talk about Power of 3. So first things first, Power of 3 is ICT's concept. It's not mine. This is his. I went and really, when he first talked about it, I didn't really have an idea of what Power of 3 was. I just understood it was people AMD, accumulation, manipulation, and distribution. I didn't understand it like that. The way I understand it is a little bit different than what is generally known in the ICT community. When people um, talk about candles and candle ranges, this is what I think about. Like when ICT said to think 4-hour candles, 1-hour candles, just as daily candles, it clicked to me, and I started reading every 4-hour and hourly, even 15-minute candles as basically a daily candle, and how you can go onto the lower time frames to basically gauge it. So, with further ado, let's get into it. So, power of 3. Taking out previous candle high and low, power of 3. Power of 3 is basically the open, low, high, close candle. So, power of 3. If it's a green candle like this one right here, we open, create the low, create the high, and close. That's basically what power of 3 is, in simple terms. So, based on how the previous 15 1-hour, 4-hour daily candle closes, we can plan our trade out around that. Based on power of 3, accumulation. I'm sorry, not AMD. I don't look at it as like AMD. Open, low, high, close. That's why we use these candles. We don't use like hollow line. We use candlestick charts. And like I said before, if there is a PDA array on the lower time frames that support the narrative of taking out the objective, you can. If there is a PDA array on the lower time frame, that supports the narrative of taking out the objective, you can use that as an entry pattern to get into the trade. Basically, what I mean by that is, if your candle looks something like this, right? It's a green candle. So it's a green candle that looks something like this. Something like that. Okay, something like that. I am anticipating for this candle's high to be taken. I'm going to note that as buy side. So, with that in mind, that's an objective already. Just looking at this, how this candle closes. When I say if there's a PD array on the lower time frames, what I mean by that is, let's say this is a 1-hour candle here. 1-hour candle. If we go into the lower time frames, and let's just say there's like an FEG in this right here, in this candle's body, right? And it's a 5-minute FEG, or let's just say, 5-minute FEG. There's a 5-minute FEG in that hourly candle, and we're anticipating for this one hourly candle to be noted by buy side. So what I'm going to anticipate is the next hourly candle to open, power of 3 concept right here. This is open, low, tap into the 5-minute fair value gap, high, open, low, high, and then we close. We can close up here, here, it doesn't matter. What matters for me is that I had an objective. The objective was going to be that hourly high. And stops probably outside, give that. So let's just say there's that 5-minute, just at the body. Right there, that would have been my trade right there. So Say that again. I'm anticipating the next hourly candle to have open, low, high, and then close. That's basically what power 3 is for in my eyes. That's how I view it. There's not really you can I guess you can go into further depth into it, because it can be more than just an hourly candle. It can be a 15-minute candle, a 5-minute candle, but to make it a little bit, not to crowd or make the concept too difficult for me, I just keep it at a 15 15 candle, 15 time frame, 1 hour time frame, 4 hour, 2 hour, but yeah, to keep it a little bit simple and won't be too crowded for my head. Okay, so in the example shown below, this is other back tested example I'm going to show you guys on the next slide here. Notice how there is a PD rate on the lower time frames, 5-minute fair value gap in the hourly in the 1 hour wick. This is one of the concepts of time frame alignment. Time frame alignment. So time frame alignment. That's broad. That's a broad topic. I will touch up on that probably another time. But for right now, we're top power of 3. So the objective would be the previous candle high or low. Consider taking off majority of the position once objective has been taken. Okay, so the objective for our trade would be that previous candle high. So pay attention to how this hourly candle closes, right? So we have narrative. Narrative is number one thing when you're trading. What are we coming off of? When are we coming off that PD array? And why are we doing this? And why should we do something like that? So this is on the hourly time frame. I'm asking myself, why is this hourly candle closing like this? Did we just tap into an order block? Did we fill in an inefficiency? Are we in discount of the range? And just looking based off of this, we tapped into a 4-hour fair value gap. We probably came into discount between this low and this high right here. And maybe even on the lower time frames, we could have tapped into a hourly order block or something like that, some sort. Or sorry, 15-minute order block. But just note, this hourly candle, super, big wick, taps into a 4-hour fair value gap. So that's already two things, two confluences that I'm now is in my mind. So once we recognize, hey, we just rebalanced a 4-hour fair value gap, and with how that hourly closed, we can anticipate for the next hourly candle to take out the previous hourly candle high. So I'm anticipating this high to be ran with this candle right here. Now ask yourself, will we likely take the high or low of this candle after every blah 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 blah? Like I said, I stated before. So I'm anticipating for us to take out this high first, and then see if we can. Why would we even retrace back to this low if there's reason for it? But so now you can zoom into the lower time frames to find more ideas that support the narrative you have concluded, taken out. So the narrative in my head right now is we're going to take out previous hourly candle high. With how that candle forms, how that hourly candle was formed, and that we just came off in that 4-hour fair value gap. So that's two confluences. Right now I'm going to go on to the lower time frames to add on to those two confluences. So we're on the 15-minute time frame. Prices retraces back into a 1-hour fair value gap that overlapped with a 4-hour fair value gap. So we have fair value gaps on different time frames aligning with each other. This hourly fair value gap and this 4-hour fair value gap. And we just took sell side. We took sell side. We had a market structure shift right here. And I'm trying to attack, we're going to attack this high right here. This previous hourly high. So that market structure shift is my third confluence that we're probably going to take the hourly high. That's our third. Now we're on to the 5-minute time frame. In that hourly wick, we have a 5-minute fair value gap, a breaker structure, low, high, lower low, higher high. So the highest green up close candle right here is our breaker block, sorry, and unicorn pattern, whatever. So in that hourly wick, we have a 5-minute fair value gap. Prices retraces back into the 5-minute fair value gap with the market structure shift. So that 5-minute fair value gap becomes my fourth confluence that we're going to take up the hourly high. We retrace back into the 5-minute fair value gap and notice how we respect the consequent encroachment. Sorry, there should be 5 confluences. That breaker block, that's just looking based on structure right here too. That's 5 confluences with the 5-minute breaker. So we come into a 5-minute fair value gap breaker onto the 1-minute time frame. So now we can use that as an entry to our trade. So onto the 1-minute time frame. So once we close at that, once we close the hourly candle, we can target the previous hourly candle high, right? So at 3 p.m., once again, we dip, we're buying below 3 p.m. open and 2 p.m. open. Notice how prices respects this consequent encroachment of the 5-minute fair value gap. Prices trades down into the 5-minute fair value gap at the 3 p.m. open, creating the wick of the hourly candle. So like before, we open at 3 p.m., create the low, high, close. That's what I'm anticipating for that next hourly candle to be like. So we open, low, tap into the 5-minute fair value gap, and then high, taking out that previous hourly candle high. And that's, I believe that's all for my trade there. That's all the confluences. I believe that's in total 5 confluences. We're buying below the 3 p.m. open and the 2 p.m. open. That's 1. We came back into we're trading off of a 4-hour fair value gap. We had extreme bullish closer of the 1-hour candle. We had a 5-minute fair value gap in that hourly wick, supporting prices plus a breaker pattern. 5 confluences for this trade. And it ended up playing out quite nicely. Yeah, that's basically what Power of 3 is. And to end it all off, the reason I am marking out the 3 p.m. open is because I am anticipating the next hourly candle to be a open, low, high, close. Basically a green bullish candle. We want to be a buyer below the 3 p.m. candle open. So I want to be part of the wick, the open low. I want to be part of the low and then ride it up to the high. The main takeaway from this is that this concept applies to all time frames. Like stated before, it applies to the monthly, the weekly, the daily, the 4-hour, the 1-hour, the 30-minute, the 15-minute, etc., 5-minute. And that is basically all I have for the Power of 3 concept for today. I hope that my video helped you guys understand Power of 3 just a little bit more, and let me know if you guys want any more videos. Comment down below any ideas I should talk about, cover, and keep it into account. I'll see you guys next time. Peace out. Bam.